Joining me with more is Andy Walden, Vice President of Enterprise Research at Black Knight. Andy, in a way, that sounds impossible. That is just 1%, the slowdown in growth back in 2006. What's different about what we're seeing here?
Yeah, I mean, everything, right? There's a lot different with what's going on right now. And certainly we were at much higher rates of home price growth heading in. So I think to be expected, right, with rates rising as quickly as they could or as they have, that you're going to see a slowdown in prices, but certainly seeing the market slam on the brakes very, very quickly here through the summer months.
So what happens to people who bought at the peak?
Yeah, and I mean, really, when you look at it, about 1 in 10 mortgage properties has been bought over the last year, and the dynamics are going to be very, very different depending on where you buy, right? We're seeing some areas of the country slow and even pullbacks in prices in some areas of the country, while other areas of the country remain extremely hot. You're also seeing larger down payments and lower LTVs than you traditionally do, right? So I think it's going to vary significantly depending on where you bought, at what time you bought, how big of a down payment you put on your home, among other factors.
How does this change the behavior of existing homeowners, right? We were just talking early in the program with a local bank in Texas saying that people are taking out more home equity loans and doing work on their existing home because, hey, it doesn't look great to buy something else. Is that what tends to happen more broadly?
It does, right? And the dynamics around equity are kind of interesting, right? I think you'll see more of a shift from the cash out market that we had seen very, very heavy last year to more home equity lines of credit, given the rate dynamic. You're also seeing some equity pullback, some early signs of that here in Q2, especially in those West Coast markets. We saw 4 of the 5 most equity-rich markets actually lose equity here in the second quarter. And so I think you're going to see a lot of movement going on from an equity standpoint, right? Some borrowers going out there that have locked in very low first lien rates to refinance their home. And maybe other areas of the country, you're going to see it pull back as prices pull off peak levels.
Is this the Fed, you think? We haven't seen this kind of a slowdown in growth in a long time, but we haven't seen this pace of rate hikes, 275 basis point hikes in a row in some time either.
Yeah, I mean, absolutely it is, right? And this is really the intended effect of the Fed. They wanted to slow down the economy. I think they had an eye specifically on the housing market. So this absolutely is a result of rising interest rates. The other thing that it's a factor of, though, is the Fed's policies during the pandemic that push rates down to record low levels where we saw all of this home price growth. And so now we're seeing a little reversing, of course, because of how strong home price growth has been in recent years. And then the secondary effect of rising interest rates. And those coupled together are really pushing us to the lowest level of affordability we've seen in 40 years.
All right, you pump the brakes, the car slows down. Andy Walden with Black Knight, thank you.